Hey, what's up, guys? It's Jonathan here. So, welcome back to the channel. I know I haven't done a live in a while, but there's a lot of different things I wanted to talk about. So, I figured why not have us just do a live today so we could talk about all of these different things. So, really, we're going to cover the FTX story. I know that that was a story that I have been covering for a while with some of my other videos recently. And also, I wanted to talk about the student loan forgiveness because there's a couple of different neat things that I learned this week about it. So I wanted to go over that and also talk about the University of Michigan Consumer Sentiment Survey that we got this morning because I think there was a lot of good news in that as well. So, and the way we're going to do this is that basically it's going to be almost kind of like almost like I'm filming a video. So I'm going to set it up, go through it. Then I'm going to look through the comments section and see if you guys have anything you want to talk about or any questions or comments or anything like that. And then we can just take it from there. So let's first start off with the FTX story. So with FTX, it's been an absolute poop show. But today, the most recent news that we got is that FTX and almost 130 additional affiliated companies with FTX.com filed for Chapter 11 bankruptcy. So let me explain kind of the difference between FTX and FTX.com. So FTX.com is the international version of FTX. So they serve everyone other than U.S. Residents, and then there's FTX US that serves U.S. residents. So, given the fact that both FTX.com and Alameda Research, which were two of the companies that were part of this bankruptcy filing, had assets and liabilities of at least $10 billion each. This was by far the largest bankruptcy this year in the United States. So, the way bankruptcy works is that typically you have Chapter 7, Chapter 9, and Chapter 11. So I'm not really familiar with Chapter 9, but I know Chapter 7 is where you just try to liquidate all of your assets and you just close up shop. So you're not trying to reorganize anything. You just want to kind of pay everyone else out in GTFO. But Chapter 11 allows you to reorganize your debt. So what I like so generally a lot of companies will go the Chapter 11 route just because again it allows them to still operate and still be a business, whereas Chapter 7 is like, nope, you're done, we're taking all your assets, we're liquidating them, we're paying everyone pennies on a dollar, and we're calling it a day. But even though FTX.com did apply for Chapter 11 bankruptcy, they really didn't hit any reorganization plans inside their bankruptcy filing. So that was a very strange thing to see. So I don't know. This might be the end of FTX for good. So we'll have to see. Excuse me. So one thing about this bankruptcy is that it was voluntary. They voluntarily decided to file for Chapter 11. They are under, which is like something good to know because they are under ongoing investigation, not only from the SEC and the CFTC, but also the state of California's regulator, the DFPI, and the Bahamas Security Commission, which is the home jurisdiction regulator because FTX.com is registered out of the Bahamas. So the Bahamas Security Commission moved to freeze all of their assets to protect clients, just to make sure that they could get the maximum amount of money to clients through bankruptcy procedures. So, and then on top of that, they also suspended FTX's registration. I'm guessing they probably had like a broker dealer registration, given that they were operating as a broker dealer, but I'm not sure. Maybe they have like a special way they call it in Bahamas. I'm not really too sure about that, but I know in America that's normally how they'll classify you. And then also they also went ahead and appointed an attorney to act as a liquidator. And um, they mentioned in a press release that the public comments of possible mismanagement of customer funds via transfer to Alameda Research is contrary to normal governance and without customer consent could be considered even illegal. So basically, what was happening at FTX is that they're taking customers' crypto that they deposited and they're moving it over to Alameda Research. Now, Alameda Research, I believe, was leveraging that those cryptos, so pretty much they're just borrowing against it to make more riskier trades. So it's very similar to what happened at Free Arrows Capital. Um, the only thing that I think makes this a little bit worse is that Sam Bankman-Fried, who was the CEO of the company, he was a lot more public. So definitely, um, politicians and regulators have more of an incentive to get after him. So that is, and really all of this, and really all of this came to the front when Binance, who FTX did reach out for them to buy them out and to save them from bankruptcy. What that all of that came to the front, and basically, um, yeah, and then basically Binance did some due diligence, and they realized that they quickly did not want to be involved in this, mostly due to the allegations of the mismanagement of customers' funds. So pretty much as soon as that deal was done, it was over. That was it. They were going under. So, um, also as well, Sam Bankman-Fried did step down as the CEO of FTX, but he will stay on to assist in transition. The new CEO that was appointed by the board was John J. Ray III, and he is a expert in restructuring bankrupt companies. He was a part of Enron's restructuring back in, I believe that was the early 2000s or the late 90s. I'm not too sure, but I remember I was very young when that happened. So it was a very long time ago. Um, so FTX obviously because the Bahamas regulators did freeze their assets, FTX did freeze crypto withdrawals the very next morning, um, which is which is pretty much the same thing that happened during Voyager's bankruptcy scandal there. So now customers who have crypto deposit on FTX will now have to get their money back via bankruptcy proceedings. And most likely, like in the case of Voyager, they probably won't get one to one back on their crypto or their stable coins. Because you gotta remember, like, there's a reason why people were getting 8% on stable coins when the even the best bank out there was giving you 0.5% during the pandemic. It's because they're doing is they're taking your, I don't know, let's just say deposit $100. They're taking your $100 and they're giving it out to like they're borrowing it out to like 16 other people, so that way they're able to make that kind of money, that they're able to keep up with the banks per se. So um Sam Bacon so because of this, basically FTX is bankrupt. um and Sam Bankman's Fried net worth, he was on Friday, Bloomberg estimated that he was worth $16 billion, and now Bloomberg is estimating that he's probably worth $1, if not in the negative. So so not only did FTX go bankrupt, basically he went bankrupt as well. Um, and I think that this is just a really good lesson of what happens when you mess around with debt, especially when it comes to investing, especially when it comes to like margin in something as volatile as cryptocurrencies. You know, it's very difficult to tell where the market's going to go for those. Um, a lot of, the thing I remember, there was even this discussion that I saw on Twitter. I, I mean, me calling it a discussion was like a little bit put together. But if you haven't followed me on Twitter, at Jonathan Sorunke, if you're interested, just have to plug that in. Sorry, but pretty much, um, crypto in cryptocurrencies, in my opinion, don't have any intrinsic value. And the problem is they don't have any intrinsic value. They don't have any base value, but they have a lot of extrinsic value, which is value which you could almost call it's almost like hope. It's the value of hope. It's the hope that this is going to be worth something in the future. And you know, the problem becomes is that hope kind of fluctuates very rapidly. It doesn't really hold its value. Now, like for example, like if I own Tesla stock, I could say the intrinsic value of Tesla stock is their assets. The assets minus the liabilities. Whatever the balance sheet number is, the net worth of the business, I could say that that is the intrinsic value of this company. That means that no matter what happens, the company is worth this because they own this and they owe this. That's very easy to dole out on like a spread on a SEC filing. The problem is with cryptocurrencies, it's like what backs up the value of Bitcoin? Like, let me ask you guys, what backs up the value of crypto? Nothing. That's that's kind of the point here is that there really is nothing that backs up the value of crypto. So we have to. So I mean, for me back I think it was last October, I realized that cryptocurrencies don't have any intrinsic value. And really, a lot of the movement that we saw during the pandemic was hopium. People were hoping, oh, if I invest in this, it's going to free X. I'm going to be able to retire and I don't have to work anymore. Everyone was just trying to get rich. And it just didn't work out. And why? Because there's no value there. Now, don't get me wrong. I think blockchain technology has a lot of value. And I think that that will be the future of payment processing around the world, but I do not think, but the chances of any of the current cryptocurrencies that we have in the market becoming that is very unlikely. And that was some of the reason why I left crypto around this time last year, I believe. So, um, that's just my little 2 cents on crypto. When it comes to this story about what happened with FTX, I'm not shocked that this happened, obviously because of what I said before with the Binance deal falling through earlier this week. But I do remember back, I think it was 6 months ago, when the market kind of bottomed in June, where FTX and Binance came out and said that they were going to backstop the crypto market by buying Bitcoin to kind of stabilize the price and to stop the free falls going into. Excuse me. But like, and basically they almost tried to act as like the JPAL of crypto. But the problem is that the difference between them and JPAL is that JPAL has an unlimited amount of resources. JPAL can go out and print as much money as he needs to get the job done because he has been given that right. But crypto companies don't have that kind of money. And like what FTX learned is that, hey, you keep trying to bail out a market that's fallen instead of just letting it fall. This is kind of what happens. You run out of money and your company goes bankrupt. So, um, I think that now, right now, it's pretty much just Binance because I believe Binance has 14x the amount of assets than Coinbase does. So really, it's just Binance that's kind of holding up the whole market. So we may even get to a point where Binance goes bankrupt. And I think that once we get to that point, and once we see the fallout of Binance going bankrupt, then I think that it would be a good time to re-enter into the crypto market again if I wanted to speculate. Because at the end of the day, I think all crypto is a speculation. So, um, and I think the biggest thing that we gotta remember here is that not your keys, not your coins. You have to, if you have crypto on a exchange of any type, you should really, in my opinion, I think you should really consider getting it off of there, even if you believe that the company that it's on is not going to go bankrupt or anything like that. I would be, all these companies are saying all these different things. Oh, we have reserves, we have this, we have that. Who honestly, I don't believe any of them because FTX said the same exact thing, and then 2 days later filing for bankruptcy. So, and the same, and Voyager did the same exact thing as well. So, I'm just thinking to myself, like, okay, well, what is Robinhood that sent out an email to all of its customers saying that they're fine and they're good and everything? Is like, man, maybe they're going to go bankrupt on Tuesday. Who knows? So it's just a lot of nonsense, and and really, I feel very bad for the people who did lose money on FTX. I know there was a lot of creators who really pushed FTX and really was like, really was, I guess you could say, shilling FTX. Um, I did actually just watch CoffeeZilla's video about it, and I have to say, like, even though yes, I do feel like those creators do need to be held accountable. Um, I don't think you could sit there and completely blame them for people losing money on FTX because there was quite a few that came out and said like, "Hey, you might want to get your money off," and they said that even before FTX US shut down, which is really where in the personal finance space that's really the bulk of the audience. But I mean, nevertheless, and a lot of creators did apologize. I thought that that was really good of them to do that. At the end of the day, they're human beings, and they immediately apologize. They immediately warned people. Even some of the bigger creators who really got a lot of sponsorship money from them, um, really like really did apologize. I'm not here to try to defend them, but it's just something that I do want to mention. Um, Another thing is too is that like none of us saw this coming. It was such a shock because like no one thought that FTX had an issue. Even a couple weeks ago, I was thinking to myself, well, if I'm going to go buy crypto, I might as well buy on FTX because they seem like they're in a really good financial space. And then boom, we hear about what's going on behind the scenes at Alameda, and everything just collapsed. Yeah, so I, you know, at this point for me, it's either cold storage or sell and take the cash and put it somewhere. That's not financial advice for you, but that's just my thinking behind it. So that's all I got for you guys. Thank you so much for watching. I'll see you in the next video. All right, so that's done. Let's see. We don't have any comments. Okay. So one of the hmm, okay, so moving on to our next topic, we're going to talk about student loan forgiveness. So um let me set up and let's go for it. So, hey, what's up, guys? It's Jonathan here. So, back, so, sorry, let's restart this. Hey, what's up, guys? It's Jonathan here. So, we just, so let's talk student loan forgiveness. Hey, what's up, guys? It's Jonathan here. So, we just got some major updates about the student loan forgiveness. The Biden administration is currently working on. And I just wanted to update you guys on kind of what's going on and kind of my thoughts behind it. So, without any further ado, let's get right into it. So, back in late October, student loan forgiveness was temporarily blocked by the Court of Appeals in St. Louis. And they were responding to an injunction request from 6 states: Nebraska, Missouri, Arkansas, Iowa, Kansas, and South Carolina. Initially, the suit was dismissed, and couldn't the states couldn't convince the judge how it would directly harm their states. But that but the temporary block is still in place as the Court of Appeals tries to review the court case. So now on Thursday, a Trump appointed federal judge in Texas struck down the student loan forgiveness proposed by President Biden. And the judge sided with two borrowers in Texas that argued the administration violated federal administrative process with the forgiveness plan. So pretty much what they're saying is that generally speaking, when you spend money at the federal government level or you authorize any kind of funding, uh, um, you have to it has to run by Congress before it gets approved. So for example, the way that this or their legend this should excuse me. So the way they are alleging that this should have gone down is that oh my gosh, excuse me. So basically, the way they're saying that this should have gone down is that it should have been a bill that moved its way through Congress, been approved by both the House and the Senate, and then should have been moved on to the president for him to sign off on it, instead of it just becoming an executive order. So the two borrowers that did argue against this was Maya Brown and Alexander Taylor, and they stated that their debt was unfairly excluded from the plan. So Brown had about $17,000 of debt, which was all commercially held. So obviously it didn't qualify for the student loan forgiveness as that only was for public student loans. And then Taylor had $35,000 of debt, and he argued that it was unfair to that he didn't get the extra $1,000 for the Pell Grant. He didn't get the extra $10,000 because he didn't get the Pell Grant while he was in school. So, in response to this new ruling from the federal judge in Texas, the Department of Education has stopped accepting applications for debt relief as a result of the ruling. And um, they did send out an email to, I think there's like list they have that they send out updates about the student loan forgiveness to. I did sign up for that list because I am interested in following up and keeping up with this. And I also have like $30,000 of student loan debt myself, so I'm very interested. Um, he did send the department, gosh, what do they call them? The Secretary of Education. He sent out a letter saying that the administration believes that the plan that they put in place is lawful, and he also said that 16 million applications have been approved and will be discharged once the plan is approved by the courts. Now, the key word in here, and I really thought that this was interesting, is that they said if approved by the courts. So they're trying to make it seem like, oh yeah, it's still gonna happen, but if the courts decide, heck, this is not like okay, then it's not gonna happen, or it's gonna have to pass through Congress, which right now, currently, at least the Congress we're in now, it's democratically controlled by the House, in the um but in the Senate it's a 50-50 tie. But for most bills to pass the Senate, you usually you have to get 60 yay votes. So that means that they would have to get 10 Republicans to on that means that 10 Republicans will have to be on board with this, which, given the fact that the pretty much the whole Republican Party is against it, and some Democrats are against it as well, there's a very low chance we'll see this happen if it has to go through Congress. So that's just something to keep in mind there. They did also state that the Justice Department does plan on appealing the decision. So this isn't over just yet, but it may become a court fight and may take some time as well. So apparently, with the CARES Act, there was a clause in there that stated that during, if you made a student loan payment during the lockdowns, like during COVID, you can actually get a refund for the payments that you made. So I think I read this on like some news station or some newspaper, and apparently the way it works is that you call up your loan, was it loan handler, loan processor, and you pretty much just ask them for a refund for all the payments you made during COVID, and they'll actually send you a refund check. And so that way, if you did pay off your loans and you did want to take advantage of the student loan forgiveness, you could possibly do it that way. Another way, but what a lot of people are saying now is that if this doesn't go true, that what you should do is you should keep that check, and so you could just like send them the money back just in case. Um, so it is something good to know. It's something that I actually really haven't heard about a lot on YouTube. So I did want to mention that. So overall, my thoughts are that if you think you qualify, or if you do qualify, I really think everyone should. I think everyone who qualifies or thinks they qualify should apply for this if the portal does open back up, because I always hear this argument like, oh, student loan forgiveness is immoral because there's people who paid off their loans, there's people who did this, there's like a million different reasons why. And even though yes, I do agree with that, I also do think that if you live in the US and you pay tax in the US and the US government gives you a benefit that you qualify for, that you like outrightly qualify for, then yes, you should take advantage of it. Like I don't understand this, like like tax money isn't charity. Like you pay taxes so you can get a service from your government. So if you get a chance to get your loans forgiven, then yes, in my opinion, you should take advantage of that. So, um, you have to listen to those movies like, oh, well, I paid for all my college. I didn't take out no debt. I paid off all my debt. Da, 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 da." It's like, dude, like when you went to college, you could literally fund college with like a month's work as a summer job. Like nowadays, like you have to have like a good job to cash flow college while you're in college full time as a student. So like it's like almost impossible to like cash flow college unless if you have like a family or someone who has a lot of money who's going to help you. Um or you have a lot of savings, but then you're kind of trading like, if let's say you work when you get out of high school and you save money, and then now like you decide to go to college later on, you cash flow college that way. But I mean, then you're playing a game between time and money. Is it better for you to just take on the debt and so you get paid more? I don't know. It there's so many different factors when it comes to that I'm not even going, that's not what this video is about, so I'm not even going to go there. So second, the another thing that came to my mind is that there is a strong possibility that the courts might be right on this and that this whole plan might fall through. And, unfortunately, back when Biden came out and did talk about this, I remember I posted something on Instagram and I said, um, I really think that this is this political ploy and that it probably won't go true. It's a little convenient that the judge came out with this ruling like 2 days after the election. It's like, dude, really? Like you're gonna tell me this wasn't fixed? Um, but yeah, so I don't really know how this is gonna go. I would just say, worst comes to worst, this has kind of been my position on student loans. Just suspect to pay it. Like, like don't think that some heavenly figure from the government is gonna come and help you. Like, just assume that at the end of the day, you're gonna be the one who's gonna be on the hook to pay for this. Um, not financial advice or anything, but I'm just saying like prepare for it. So if worst comes to worst, you just continue on and you move your life. But that's basically all I got. Thank you so much for watching. Please hit the like button and subscribe if you haven't. And I'll see you in the next video. Peace. All right. So that's done. Any comments? No. Hmm. Okay. So Okay, so let's move on to the University of Michigan Consumer Sentiment. Let's move on to University of Michigan's Consumer Sentiment Survey. So let me set up here. Let me get some water. All right, so hey, what's up, guys? It's Jonathan here. So, the November report for the University of Michigan's Consumer Sentiment Survey just came out, and it has some really interesting things I wanted to share with you guys. So, let's get right into it. So, from the report, we're told that all components of consumer sentiment have fell month over month. Durables such as like cars and home appliances, for example, buying conditions fell after rising last month, mostly due to mostly due to a rise of interest rates, with the Federal Reserve giving us another 75 basis point hike just about a week ago or so. Um, falling sentiment, falling sentiment was felt throughout the entire economy, according to a report, based on multiple global risk factors like war and inflation, and also election uncertainty here in the U.S. as well. And these overall results are a good sign that the Federal Reserve's actions are working. That their tough talk and their interest rate and their monetary tightening, or quantitative tightening, I should call it, is effective and it is working. So this is good. When it comes to the big thing, which is what most economists look for from this report, is the inflation expectations. And for this month, the 1 year expectation for inflation is 5.1%, which didn't change much from last month. But I do expect this to be a lot lower, especially if we get another good CPI print like we did this month, next month, and the Federal Reserve relax. The Federal Reserve shows signs of relaxing at their next FOMC meeting, but I think the report comes out before the FOMC meeting, but we'll see. Um, but it is anchored, which is good. It's not rising anymore, so consumers believe that inflation is cooling down, and then the long run expectation is 3%, which didn't really change much either. So, um, one of the things they did with the November report, which was really interesting, is that they did have a survey on how people felt about what political party would be better for the economy. Now, most consumers surveyed believe that Republicans would benefit the economy better than Democrats, and there actually is some truth to that. That division in Washington does lead to gridlock, which leads to less change. And one of the things that the stock market doesn't like is uncertainty. So it does play a really big. So it is a really good thing. So actually having like the Republicans control either the House, the Senate, or the White having well they can't control the White House because we don't have a presidential election, but having one of them control either the Senate or the House is really good because it creates gridlock, and when you have gridlock, you have more certainty. There's less risk of massive changes. Like for example, the Democrats did want to increase the corporate tax rate. I believe it was from 21% to 24%, and that would have absolutely destroyed company earnings, which would have decimated the stock market as well, and would have and if that was to pass, it would probably prolong the kind of the earnings recession we're seeing, which we're seeing the slowdown in EPS and the lower EPS numbers from a lot of companies. So um, there is some truth to that. It does seem like the Republicans will control the House, so that is at least somewhat of a good thing. We really don't know who's going to control the Senate yet. Not until we hear back from, I believe the big ones we're waiting for is Arizona, Nevada, Pennsylvania is already determined, and then Georgia is going to go to a runoff. In that runoff, honestly, I think Raphael Warner has the upper hand, given that he has been a part of a runoff before. But we will have to see how that one plays out. Um, and I don't say this as like, oh, you're a Republican, you're a Democrat. Like, I'm not really like picking a side. I'm more of just saying this just as like factual things that like I've actually observed, not like, oh, this is my opinion. So, overall, the report did show that consumers are starting to lose confidence, which, from a Federal Reserve's perspective, is really good because when people lose confidence in their finances, they tend to spend less money. Um, which is also good for markets because that shows that the Fed's actions are working, and that probably contributed to some of this craziness that we saw in the market. Like we had some like wild numbers. Matterport was up 24% today. Cloudflare was up 13%. Um, Redfin was up 21%. Polestar was up 21% as well. Carvana was up almost 19%. AMC was up 17%. We really had some like crazy runs in the stock market over the past couple of days. I think the Thursday one was mostly based off the CPI, and the one that we got today on Friday was mostly based off of the consumer sentiment report and some of the runoff of what happened yesterday. Sometimes it takes a couple days for those reports to digest. So hopefully we continue to see this momentum with the future jobs and CPI reports that we get. I will stay on top of them, and I do plan on making videos about them. So I encourage you to stay tuned. But with all that said, as always, please hit the like button, and I'll see you in the next video. Okay, so that video's done. I have this question from Old Scale. Do you think problems in Europe is going to be a drag on American-based international companies? Um, hmm. I think that problems in Europe. I'm guessing you're talking about the high inflation that they're having over there in Europe, and in that case, I would say um the high the high inflation. I don't know. I think the biggest issue with with American based companies that operate in Europe is going to be the forex exchange, because there's been a lot of companies that have lost a ton of money because of that. Like I was reading the other day, I think it was Airbnb's report. Let me see if I could pull it up. uh Jesus, probably get me deep in here. um and they lost a lot of money on forex. Like it was bad. Let's see, cash flows. Yeah, so for example, the past 9 months, the 9 months ending of 2021, they lost about, how much is this? They lost about 7.3 million in forex exchange loss. This kind of like converting and losing value with the conversions. The past 9 months ending September 30th for 2022, they lost about $83.3 million. So forex exchange is is acting as a huge anchor for a lot of companies. I think Tesla, like they don't forex hedge at all, so they're really getting slapped around when it comes to forex. Um, yeah, I see. Yeah, that's what I was concerned about. Yeah, I don't know. I think that a lot of this stuff, if we get a Fed U-turn, we will see a weaker dollar, or we will see the dollar weaken to some degree. So I think that that really would be a positive to see a Fed U-turn in terms of the forex issue. But yeah, that was a really good question. Thanks for asking it. Um, I don't think we have any other questions. So I'll wrap up the live stream here. Thank you guys so much for joining me, and I'll see you in the next one. Peace.